Okay, so it's time for our keynote speech for the evening. So it's my pleasure to introduce Jacopo Iorino, who is the head of communications for Ecuador, Brazil, and has been part of Equinor for over 9 years. His previous experience at Equinor ranges from a variety of communication roles to corporate strategy and sustainability in Norway and London. He obtained a bachelor's degree in the international affairs and a master's degree in management from UCL London. Please welcome me or help me welcome Jacopo Iorino.
All right, thank you so much. Apologies for my voice. I've been on the road for a couple of weeks for work, so I'm feeling the effects now. Today I'll be talking a bit about navigating uncertainty. Unless you live under a rock, I guess some geologists might, but if you don't, you know the world is increasingly uncertain. And what is the one word companies and businesses don't like? It's on the slide. It's uncertainty. So I'll talk a little bit about how we as a company navigate this complex world we're facing. But before that, I'll introduce quickly Equinor for those who don't know us. Oops. Or not. Do I need to? Okay, I'll just do like this then for the next slide, in general. No, it's not. I can just say next and then you go to next. Agora funciona, ótimo. Okay, so the company was founded around 50 years ago. And we have today 25,000 employees. We're present in more than 20 countries. The amount of countries changes. Sometimes it goes up, sometimes it goes down. It all depends on whether we're able to establish viable businesses. So I put this slide up because I think the story of Equinor and the story of Norway is quite interesting. As I said, it started 50 years ago, and basically oil and gas was discovered almost by coincidence in Norway. And then the CEO, the Norwegian government decided, okay, we need to set up a state company. And they appointed a CEO, and the CEO appointed, the first employee he hired was an accountant. And they had to figure out a way, okay, how do we keep our balance sheet, if you want to call it that way. And they come up with the solution of getting a cigar box and putting the money in and out. So that's where their solution. So that was 50 years ago. In 2022, 50 years later, the company produced $50 billion of tax globally. So it's a huge amount. And I just thought it was very interesting to see how all the money the company had was in the cigar box. And then 50 years later, we're producing $50 billion in tax. In fact, Equinor is the company that produced most tax after Saudi Aramco in a single year in 2022. And something that Norway did, which was also very smart, was they set up a oil fund, which I think was also a source of inspiration for Trump, who's also setting up a state fund. Of course, the challenge for the US is much bigger, considering it's a bigger country. Much easier for Norway, 6 million people and a lot of oil and gas. But what they did is, okay, let's not use all this money, let's invest it. And today, the oil fund is worth $2 trillion, so it's a huge amount for such a small population. In fact, Norway owns 1.5% of all the global equity. So all the companies in the world are owned, 1.5% of them are owned by Norway. And for me as an Italian, that's quite remarkable, because in Italy, it's a country with a lot of debt. Any child that grows is born with around $55,000 of debt. And in Norway, you're born with a positive of $330,000. So quite a different story. So this is our portfolio currently, but as I said, it changes depending on exploration success, but also on the renewable side. Over the past few years, we've really focused our international upstream portfolio, and Brazil is one of the key core areas we have outside of Norway. We will invest by 2030 here in Brazil $25 billion, so it's a very important market for the company. And we have all kinds of resources, from renewables to oil and gas. And even within oil and gas, it's oil, but it's also gas with the Haya project. It's more mature projects as well with Peregrino. We have a strategic partnership with Roncador, with IOR. So it's really quite varied. And then on the renewable side, it's mostly onshore solar. So those are up in the northeast. So going back now, I've introduced the company about the topic of the day. I think one of the ways you can interpret what's happening in the world is looking at what's being discussed in some of the key conferences of the world. And if you look at the COP conferences, the climate conferences, you can definitely see how things have shifted over time. We had the first one, not the first one, but on this slide at least, COP26 in the UK. This was a COP on the backdrop of a lot of positivity around energy transition. Oil and gas companies were actively discouraged from being present there. And there was a lot of optimism around renewables and decarbonization. Of course, then you had the war in Ukraine, which really radically changed things. And you had the COP in Egypt, in the UAE, and in Azerbaijan. And this was maybe on the other extreme, based on countries that are really quite dependent on oil and gas. And COP was actually quite criticized at the time for being hosted in these countries. And then you have Brazil this year. And I think Brazil will really have to bring together all these different realities. How do you maintain an important sector like the oil and gas sector, but how do you decarbonize at the same time? And I think really we'll have to reconcile all these different narratives that have been developed over the past few years. Another way to interpret what's happening in the world is your personal anecdotes. And just to tell you a story, when I joined Equinor in 2016, I went to Brussels for about a month. And I just remember when we wanted to bring up natural gas with our stakeholders, no one was really interested in natural gas. It wasn't the most popular topic. But then, of course, the war in Ukraine happened. And now when we engage with stakeholders in Europe, they're all asking, can you deliver more gas to us? So the appetite for long-term gas contracts, the appetite for natural gas has really changed. And I think it's kind of exemplified in this picture where you have the head of the European Commission, you have the Prime Minister of Norway, you have the head of NATO and our CEO at the Troll field in Norway, which provides a lot of gas to Europe. And they're holding their hands on this pipeline, which says, we are secure together. So I think, you probably all heard about energy security. But I think for us, energy security is really tangible. When the war happened in Ukraine, we had military outside our onshore facilities. There was a clear demonstration of force from NATO with this visit, for instance. And it really changed things, And I think for a country like Norway, which is not really used to this was quite a new development. And it was all for good reasons, because, of course, you had the Nord Stream attack, which really changed the risk picture for critical infrastructure in Europe. And of course, we, or not just Equinor, but Norway has a clear interest in this, because if you put down a pipeline that is on the NCS, on the Norwegian continental shelf, it's about 8,800 kilometers, which is the same distance as from Oslo to Rio de Janeiro. So a huge, if you were to lay it down. So it's a huge amount of pipeline that needs to be constantly monitored. And there's a good collaboration with NATO and the EU to protect this infrastructure. And Norway provides 30% of the gas export to Europe. So this is just to bring the point that, a lot of people talk about energy security. This is energy security. But of course, gas is not only important in Europe for us. As I mentioned, we have the Haya project here in Brazil, which will provide 15% of the gas demand to the country. So energy trilemma, you've all heard about this. It's about finding the balance between decarbonization, security, and affordability. And I think that it shifts depending on where we are and what's happening around us. So as I mentioned, COP26, we were probably a bit too much on the left side, maybe a bit idealistic. Then the war happened, the Russian invasion of Ukraine, and maybe we're too much on the other side. And I think now we're somewhere in the middle around affordability and security, where it's not only about security, but it's also making sure that energy is accessible, that we can pay our bills. And we believe that the middle is where it's sustainable and where we should aim to be. And of course, the way you look at this graph changes depending on who you are. If you are an NGO, a climate NGO, maybe you believe, we were far too much on the energy security side, and we should move to the other side. If you're an oil and gas trade worker, a union worker, maybe you're happy that now there is more reality in the energy transition. So this is just to say that there's different perspectives. Investors, they're a very mixed bunch. Some investors believe a company like ours over-invest in renewables. Some believe we under-invest in renewables. So it's very complicated. And I remember listening to this interview from the CEO of Exxon, and he was saying how, you're in a company and you eventually climb the pyramid, let's say, and you think, okay, finally, when I'm the CEO, I call the shots. And then he actually realized, once you're the CEO, there's an inverted pyramid, which is basically all the stakeholders you face, and having to appease investors, industries, NGO, society, academia. I mean, you call it. So, you have thousands of bosses, which you need to some way appease. So as I said, hopefully we go to the middle, and that's where we believe it's a sustainable energy transition. Of course, that also depends, it's not just on perceptions, but it also depends on hard energy realities. What is the energy demand? How fast are we able to transition? How fast are we able to electrify? So there are some real demand and supply considerations here. It's not just on the perceptions of stakeholders. So how do you navigate this incredibly complex seas, let's say? And one of the metaphors we like to use is like having a boat. You shouldn't make too many rough adjustments, otherwise that will put you off chart, but you can make some small adjustments as you go. And that's what we try to do. We don't try to radically change the direction of our strategy, but we try to make some adjustments as we go. This is a graph from, I think it's JP Morgan, and basically it shows this dilemma that oil and gas companies face. We want to do three things. We want to build a large new energies business, We want to maintain the value of the oil and gas business, invest, longevity. I think that's one of the key words now. And then you also want to maintain your investors happy. So you want to make sure that they receive generous dividends. But of course, you can't do all three at the same time. So you need to basically pick and choose, because in capital, we don't have the capital to do everything we want, and you need to find a balance between these three. And I think, some companies will move down to the bottom, some companies will go up north, so it depends. So what we think helps us is maintaining investor support. So every 3 years we issue a transition plan, which we put forward for advisory vote towards our shareholders. And the first time we did this was in 2022, and we got 97.5%, let's say, support from our investors. And that basically tells our investors, are you happy with the direction? Are you happy with the speed? Are we going too fast? Are we going too slow? And they can give an example of their confidence through this advisory vote. It's an advisory vote, of course, so we're not obliged to follow. And then every year we provide an update on how are we performing on some of the key metrics. And then in 2025, we did another update, another energy transition plan update, and we still have high levels of confidence, around 95%. Of course, having the Norwegian government is, as a key investor with 67% is really important, so they are a key stakeholder that we engage with quite thoroughly around this topic. So this is our strategy. It's quite a simple strategy, and it's part of the transition plan as well. It's always safe, high value, low carbon. If you do these three things right, then you succeeded. You know, if you find a project which is safety, I don't even need to talk about, but you know, is commercial and has low CO2 intensity, then we will invest in that project. And this trickles down in all the investment decisions that we do. And we believe that having a low carbon portfolio is actually a competitive advantage and will be more important, even more important going forward. And then our strategy really is based on these three pillars. It's the optimized oil and gas portfolio, it's high value growth in renewables, and it's new market opportunities in low carbon solutions. And I'll tell you a little bit about these right now. Optimized oil and gas portfolio, so this basically means, of course, investing in commercial projects that have low break-evens, high production, but are also have low CO2 intensity. And then I think what the company does is we invest quite a lot in this area. For instance, one of the solutions in Norway is to electrify some of the oil and gas platforms. And that's been very important for the past few years, and it will be very important towards 2030. And one example, which is quite cool, is Hywind Tampen, where basically we have floating offshore wind to power offshore oil and gas platforms. I won't lie that this is possible only in a few countries, and Norway is one of those. But it is not an easy topic, so it does receive scrutiny, and people are saying it can increase the electricity prices of the local communities close to the coast. So it's not an easy fix, and there's a lot of debate around this topic. But that does not mean that in other countries where we don't have maybe the same level of infrastructure, level of low cost of electricity, we can't do things. And here in Brazil, one of the things we do is we have CCGTs for these two projects that are coming on stream, Bacalhau and Raia. And basically, this will really bring down the CO2 intensity of these projects. The second pillar of the strategy is around renewables, and it's two main parts there. It's the offshore wind part, which is very close to what we know how to do, offshore oil and gas, complex projects, difficult environments. So it makes sense for a company like Equinor to invest here to operate these projects. And we have actually the largest offshore wind project in the UK called Dogger Bank, and have also invested quite a bit in the US. But then we also have onshore renewables, and there it's a different kind of business, So if we were to come with our management systems, our culture, we will be bankrupt on onshore renewables, because it's a very different business. It needs to be lean, it needs to be easy, quick. And then so our strategy for that part of the business is actually, let's buy companies that know how to do this, let's own them 100%, and let's keep them at arm's length, but they run the business themselves. So that's a strategy we've deployed, for instance, here in Brazil, where we bought a company called Rio Energy. Profitability of renewables has been scrutinized quite a bit, especially on the offshore wind side. I think the way that we managed to come in has actually been quite good. Equinor was one of the first companies to move in the offshore wind space, meaning back then licenses were cheap. So we really got this early mover advantage. And then the offshore wind hype happened. A lot of companies were desperate to come in, let's say, and we were able to farm down some of these projects that we accessed quite early and make actually quite a lot of money. So we made around $2 billion in capital gains. And then we realized, okay, now this market is heated, and we were much more conservative in trying to acquire licenses. So in fact, around that period, we didn't acquire that many licenses, which some people could say, it's a failure, but we see that as a financial discipline. So now, in the offshore wind space, it's about really getting the economies of scale right, and bringing the costs down. And then the final pillar, which is, okay, we know how to deal with scope 1 and 2, which is the emissions relating to our own operations. We are growing the renewable branch of the company, but we also realize we need to deal with scope 3 emissions. These are not our emissions, it's actually also the emissions of society. And I think this example here, which is the Northern Lights, you saw in a video, in a film today. And the idea here is to basically help hard-to-abate sectors in Northern Europe and get CO2 and store it on the Norwegian continental shelf. So I think it's a quite cool story of how, you know, we've developed the skills to develop the oil and gas side of the Norwegian continental shelf, and now we're doing the same a bit with an inverse process, basically getting CO2 and storing it under the seabed. And I think in Brazil, at least, Petrobras does a lot of CCS, and they've also launched a project here in Rio de Janeiro state quite recently as well. So it's definitely an area that's developing. So this is basically the key slide that shows the energy transition plan, and basically we update this every year, and we show how are we performing on some of the key measures. So we have a goal of 10 to 12 gigawatts in renewables, and we're at around 7. We said we would reduce 50% of our CO2 emissions, absolute CO2 emissions from scope 1 and 2 by 2030, and we're around 34%. I think areas where we're seeing it will take more time is around the low carbon solutions, so CCS. It will take more time to get volume there. And with that also our net zero, our net carbon intensity metric will improve over time. So then I was thinking, okay, what's the best way to show our strategy? And I think our strategy is a bit like a Swiss knife, you know. It's we have a diversified portfolio, and some investors say, you know, why don't you just do oil and gas? Get the renewable companies to do renewables, and we invest in you because you know how to do oil and gas, and if we want to invest in renewables, we will invest in a renewables company. So that's a fair perspective. Our perspective is actually that having a diversified portfolio is a long-term strategy. We want to be here in 50 years or however long that will take. And second is that we see a lot of advantage in being able to offer this entire package to governments, to society. We can go to our stakeholders and tell them, we can do gas, we can do oil, we can do renewables, we can do CCS, and that has a lot of value in itself. And just to give you an example, you probably all know the struggles that the offshore wind industry is facing in the US, and several projects being stopped. One of those projects was ours, Empire Wind, which was already in construction. Around 20% of the project was constructed. Ørsted had 80% project, which was stopped, but they just got a successful injunction now. But for our case, at least, being able to show that we don't only have the offshore wind portfolio in the US, but we also have a very sizable oil and gas part of the business, we see that as a very good risk mitigation and opportunity creator. So we definitely benefit from having this tool or this Swiss knife strategy. So I think to sum up, the key messages here are responsible resource management is possible. I think Norway is an example to look at. I was talking to Dennis, and he was telling me a bit how the R&D investments with AMP here in Brazil are partially similar to what Norway does as well to fund oil and gas R&D in country. So I think Norway is an example of how it's possible to create wealth for many generations through responsible management. The second is that tides shift. You saw how things move around on the energy trilemma. Now we're probably more on the side of energy security, energy affordability, but we also know oil and gas might be facing a down cycle in terms of prices. Who knows, it might shift back to the other extreme. So it's very important that you don't adjust your strategy just on the whim of a short-term event, but that you have a long-term view of where the energy transition is going. And then the final point is that having this Swiss knife strategy is a way to mitigate risk. I work in communication, so for me it's all about risk, but we could actually say it's an opportunity for us and for other companies as well. So I think I'll leave it at that, and I think we have time for a couple questions.